Rusty, first I got to start because it's the obvious. Goldman says it's going to 100. It hit it the highest since 2014. I know it's not necessarily a top of the prognostication list because it's a little commodity-oriented, but what do you say, 100 or 50? Which way is going?
I think it's going to 100, Jim. I mean, what's going on right now, you know, it's political issues and geopolitical issues and what's happening in UAE and drone attacks in Ukraine, all that kind of thing. And that's got crude oil up to the highest price it's been since October the 13th of 2014, just like what you said. But there's an awful lot of momentum around what's happening out there aside from the fundamentals. You remember what happened back in November, where it just looked like that so much of the market really wanted to push prices into the triple digits, into that $100 range. And then COVID happened and the whole thing went kafooey. Well, those folks are back. And this time, I think they're going to make it happen. The only question is when and for how long.
Wow. Well, if it's when and for how long, then I have to believe that with the Permian, the number's the highest in December that they've ever been, is a great place to take advantage of it. Now, I know you don't recommend individual stocks per se, but perhaps you can tell us who's got the best break even so then we can make our decisions.
Well, I don't even know if I can tell you that, Jim. I can just tell you that most of the producers have break evens in the 30s and 40s. So if we're talking about prices that are netting these guys back to something in the 80s or 90s or even higher, then heck, it's party time. Everybody's making money.
Well, if that's the case, I know that your number one prognostication, waves of deals are coming to exploit public company energy transition optics. Now, this could be situations where larger companies want to get better on the ESG side. So what, they sell to smaller companies or to private equities? Because these are all going to move things.
They sell pieces to smaller companies. The public companies are the guys that have the focus on ESG. The ESG cops are looking at those guys, but the smaller companies, the private companies, they're not under nearly so much scrutiny. So you have the public companies that are doing just simple deals. They're just selling some acreage to the privates. And then you've got some situations where, like, I'm a public company. I own the royalty. I own the rights to produce the crude oil and natural gas. And I'm going to get a royalty on that if I sell that to somebody else and obligate that party to drill that acreage. And they make the money by drilling the acreage, and I make money by getting a royalty on the acreage that I couldn't drill because Wall Street's on my back.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com. Or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.